Today, we are talking about the median sales price in the Phoenix market. It is something that everyone has on their mind and wants to know where prices are today as compared to last year, where they are trending. So, we're going to get into it. Let's start right now. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, and I'm always analyzing the data of real estate here in the Phoenix area, what's going on with the MLS, sales, all of the good things. So, let's dive right in. So, first of all, where we stand today with our median home price, there's a couple different ways to look at a median. And so you have to be careful on what the data says because it can look different depending on how it's measured. We're looking right now at the monthly median sales price. So that means that that number is taken from the sales in that month. So the most recent data that we have, and all of this is from the Cromford report, is $412,000 being our monthly median home price right now. You can see this has absolutely trended down since May when we reached a peak, or May, June, of $475,000. Now we're at $412,000 for that monthly median, which is pretty much a change of about 14% from peak to trough. So that's where we ended 2022. Obviously, we are now only 4 days into 2023. So I imagine that this number is roughly the same, but we'll see what the January data looks like as soon as we get that. You can imagine this is going to start to look real bad as we compare year over year the monthly median sales price. So here's where I caution you on reading into headlines and really understanding how things are being measured, because of course it's going to look nasty when we start comparing 412 to eventually 475 and 466 and 456. So we're starting out this year lower than last year for sure. And this gap is only going to get bigger and bigger, especially if our median continues to go down. So keep that in mind, how that's being measured monthly median. And, we're starting lower than prices of 2022. And this will likely soften a little bit more. So this gap is only going to get bigger. 2022 started at 433. So according to this, we're about $20,000, give or take, lower than the median price when we started last year. So let's look at another way to measure this. Before we go there, I also wanted to just point out 2021 pricing here. And we've crossed that line just so you know. We're at 412. We ended 2021 at 425. So we're officially, when you measure the monthly median sales price, below our 2021 pricing. And again, if this continues to trend down, we're going to be hanging out in those 2021 prices. Now, 2020, we have a little ways to go to get there. I know a lot of people are hoping for those 2019, 2020 prices, but this is a pretty big change. We ended 2020 at $332,000 as our median monthly sales price, and now we're at 412. So that would be a pretty big dip to take, but we'll see. You never know. We could get there. But for the most part, we're hanging out around 2021. So let's look at the annual median sales price and how this differs. Before I jump over there, if this information is helpful, hit the like button for me. I'd really appreciate that. And subscribe if you're not a subscriber. We'd love to see you here every week as we go over this data. So annual median sales price, we're sitting at $450,000. So remember, I said things look a little bit different depending on how they're measured. This annual median sales price is measured by taking the median price for homes that were sold within the previous 12-month period. So from December of 2022 to December of 2021, taking all of that, all those sales into account. So it's a smoother graph because there's a lot more data going into this, and you're not going to see as much volatility in it. Now we're still looking month by month, but it's an annual account. So this is showing a higher median sales price, obviously very different from 412. The annual is sitting at 450, and it's just been stagnant the last 3 months. Previous to that, there was a big climb throughout 2022. And we'll see if this starts to fall off. I imagine it will, but same thing here. It depends on what you're looking at, right? Because if we start the year of 2023 at 450,000 annual sales price median, we are showing a gain compared to January of 2022, which was $400,000. So a headline could be saying that home prices are up year over year. Versus when you look at the median, it's down year over year. So you really have to kind of take into consideration how things are being measured when you're hearing the news on the internet or wherever you decide to get your news. Social media, it's everywhere. So 450,000 is the annual median. And it'll take until, like probably mid-year till we start to see the annual median reflecting that prices are lower this year than last year if this trends downward. So, again, it just depends on how it's measured, but that's where we're hanging out with the annual median sales price. Now, let's look at rents because those are affected as well. Rents have gone down. This is the median lease price by quarter, which is one of the easier ways to look at it because, again, it actually will show a trend instead of being so volatile. So 2,095 is where we're at for the median lease price for Q4 of 2022. And that took a big dip from Q3, which was 2,195. And then Q2, we were actually at 2,200, which was the peak. So right now we're sitting about where we were at for Q1. That was 2,110. Last year, we're at 2,095. So a little bit off there, but pretty close to where we started the year last year in terms of rental rates. And this will probably continue to decline because we're seeing lower demand for rentals. And that's really because household formations are changing. People are consolidating households. They're getting roommates. They're moving back in with family, that kind of thing, because things have gotten unaffordable. And so they can't pay for a 1-bedroom condo on their own anymore. They need to get a roommate and maybe get a 2-bedroom. And so that takes 2 people and puts it into one household instead of 2 people in 2 separate households. So we start to see demand shrinking for rentals. And that's reflected in these numbers because landlords are not able to fill their rentals at the price that they want. So then they start taking a lower number. Oftentimes they give incentives first, like first month free rent or half off rent or something like that in order to get a tenant in there rather than dropping their rental rates. But obviously they've had to get to a point where they've changed the lease prices or accepted a lower lease price in order to get the unit rented. And that's reflected here. So I do think we'll start to see this continue to go down. How far? I don't know. It's going to depend on a lot of different factors of what happens this year in real estate, but rental rates have definitely softened. So that is the story there. There was a great article from Redfin that I wanted to share that gave housing market predictions for 2023. And I thought this would be fun to go through, and I can kind of speak to some of these. Others I don't know enough about, but of course this is national. And so for Phoenix, things behave a little bit differently sometimes. But here's what they're saying their predictions are for 2023. So let's talk about this as we start this year. Home sales will fall to their lowest levels since 2011 with a slow recovery in the second half of the year. I definitely think that that is a strong possibility. How low the number of home sales will be is a question mark, but they're definitely going to be lower than we started out last year, and probably lower than where we've been the last few years, just because transaction volume is very low right now. Especially in Phoenix, we have buyer demand that's kind of low, and we have seller interest that is low as well. They don't want to sell their homes because they have a great interest rate, and they don't want to go pay a higher price with a higher interest rate for something that they may not need. So unless you have to sell, you're not typically selling your house right now. So because of that standoff, we are definitely seeing low transaction volume, and I would agree with Redfin on this prediction there. Number two, mortgage rates will decline, ending the year below 6%. I think that could be true. We'll see what happens with rates, and they've already started to decline now as we start the year. We'll have to see what happens next week. I think the end of this week we'll be getting our jobs report information, and then next week should be some more inflation data, and then February the Fed will meet again, and so we'll see how that is affected. But I think largely the mortgage industry has already kind of baked in the future hikes. They kind of are anticipating what the Fed might do. And so since rates have fallen significantly over the last month, they might hold steady there for a little bit and not bounce back up, and eventually could go down if we see a recession or, a few other factors could come into play there. Prediction number three, home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. Yes, I think that's absolutely true. We're already seeing those year-over-year declines again, like I showed you, depending on how you measure it. And we have extremely low foreclosures. We will probably continue to see extremely low foreclosures because people can still sell their house. They just may not be able to sell their house for the price that they could over the last 1 to 2 years. But if you see any articles about foreclosures, at a all-time high or in the last few years, or a rush of foreclosures, keep in mind we've had forbearance for quite a while after the pandemic, and so that was really depressing the amount of foreclosures. And so now that we don't have that anymore, of course, when you compare year over year, our foreclosure numbers will look a little bit higher now than they did a couple of years ago or a year ago. But that said, we're just not seeing a lot of foreclosures, even on a historical basis. I don't know the numbers for Phoenix. I would have to check that. But our foreclosure numbers are so low, like some of the lowest we've seen in a long time. So I don't see that being the case, in my opinion. Prediction number four, Midwest, Northeast will hold up best as overall market cools. I think that's true. They were some areas that didn't see the most gains, like places like Phoenix and Boise and Austin did. And so, and they talk a little bit about that here, large increases for those kinds of markets. And so some of these will probably just hold steady and not be quite as affected. Prediction number five, rents will fall. Many Gen Zers and young millennials will continue to rent indefinitely. I do think rents will fall. It depends on rates. If they can afford homes, I think they will start to buy and not rent indefinitely. So rates and prices could affect that. Builders will focus on multifamily rentals. That is definitely happening here in Phoenix. So I think we're going to continue to see a lot of that. Our multifamily rentals permits, I talked about this a couple months ago, are the highest they've ever been in history. So we're definitely seeing that here in Phoenix. Investor activity will bottom out in the spring and then rebound. That's definitely possible. And a lot of investors have pulled out. Rates are not favorable. Prices are questionable. And if you're a flipper, it is not the best time to be doing that unless you really know what you're doing. So we haven't seen a whole lot of investors activity. But if rates change, if prices soften, I think we'll start to see more investors come out of the woodwork. Gen Zers will seek jobs and apartments in relatively affordable mid-tier cities. Prediction number 9, migration from part of the country to another will ease from the pandemic boom. That is likely. I think we're kind of seeing a shift back to reality. I don't think everything's going to shift back to normal, but I do think we're going to start to see more people kind of settle into what life was like before the pandemic. Rising disaster insurance costs will make extremely climate risky homes even more expensive. That's possible. I don't pay that much attention to climate risk areas because we are not one of them. More cities will follow Minneapolis's YIMBY example to curb housing expenses. This was new to me. I didn't know what this was. I think that could be a possibility that that other cities will start to do this. Basically, this is eliminating single-family only zoning and doing more high-density home building. I don't know if Arizona will adopt that or not. don't have too much of an opinion on that one. Buyers agents commissions will rise slightly as fewer agents broker fewer deals at lower prices. This could be true just because it's not as easy to get a buyer these days. And so listing agents may encourage sellers to give some incentive to be able to bring a buyer's agent and a buyer to the table. So there may be some shift in that, but I don't think that's a huge thing that we're going to see this year, like a big change, a big trend, just my opinion. But so that's it. I think that's all that Redfin had predicted for this year. So that kind of covers all of the pricing, foreclosures, rates, all of that good stuff. So I thought that was good to have, whether you agree with it or not, or whether you care about my opinion or not. It's some good additional information to take a look at and kind of keep on your radar as trends that may be coming our way. So I hope this was helpful. If you want to see the difference between the monthly median sales price and the annual median sales price in your zip code, check the description below. I have a link to request that information so that you can get that and just have an idea of where things are trending, where you live, or maybe where you want to live. So send that request. If you have any questions, I've got all my contact information in the description below. And don't forget to hit the like and subscribe button. I would appreciate it so much. Hope you guys have a great weekend. Thank you for joining me, and I'll be back next week with some more market data. I'm Caitlin McKegg with the Desert Dreamers team.